Now, moving on, we've got our next speaker. He will be talking about turning Bitcoin and gold into digital income-generating digital assets using innovative financial engineering and quantitative science. We've got Mr. Shamik Raja, founder and CEO of GoldPesa. Ladies and gentlemen, Mr. Shamik Raja.
All right. My name is Shamik Raja, and I think I'm going to blow everybody's mind with what I have to say today. By the time I'm finished this speech, and if everybody truly understands the concept behind GoldPesa, I'm almost certain that you will have goosebumps on the back of your neck with the realization that GoldPesa has the legs to compete with some of the majors. And while we're, it might be working, is that right? Okay, they're trying to get the video going, but I'm going to go into the journey, which is, I think, probably the best way for me to explain what GoldPesa is. If I tell you a little bit about my story. So my story begins in my third year of university. I did a computer engineering degree at the University of British Columbia in Canada, and I was coding voice recognition software using MATLAB. And when I was coding this software, I noticed that I could make a sound in an oscilloscope, and it looks like a noisy waveform, but somehow Siri and other voice recognition software is able to take that analog sound and compute some math and output its digital counterpart. And that is how Siri and voice recognition software is able to detect a very noisy analog signal. And so with this came the inspiration of the next 20 years of my research, which is applying principles of digital signal processing to the markets. And with the theory that if the markets look like a noisy waveform, we would be able to extrapolate some kind of dominant cycle in that waveform in order to give us just a little bit of edge. And my life as a quant started back in 1999. By the time it was 2007, I built some code that I felt had some merit, and I went to family and friends and started raising $25,000 investments. And by the time I was 26, I managed a small little quant fund of a few $1 million, and I was off to the races. And like all delusional, non-artificial intelligent code, the back test looks great until until something happens that's never happened before, right? So 2008 comes, and 2009, and the volatility in what we saw there was something that's never happened before. So naturally, my system at that time was not artificial intelligence at all. It was really crap, to be honest. And I guess hindsight tells us all of this. And although we survived the 2008 and 2009, it was because of the gift of randomness, and not really because of any sort of intelligence. At that point in time, I knew that in order to survive in this day and age and in our time, we need to be coding and predicting things that have never happened before. And so when you start asking yourself that question, you start to think, well, the printing of money, major events like the pandemic, and you start looking further back in time to see if these things have happened before. And because our learning window is our lifetime, it's a very small learning window in our brains. And even if you go to your grandparents, they will give you their learning window of 80, 90 years. But even then, you're only going back 100 years, and you hear stories about August 15th, 1971, Nixon abolishes the gold standard. And then you hear about the same thing happening on March 5th, 1933, when Roosevelt did the same. And so that's great information, and you might get some cyclical or cycle information about what may come next, but I think it's important to go even further back in time, and I took my research all the way back to the 600 Tang dynasty, all the way to the 1300 Mongolian era, to the Dutch Empire in 1650, and what you'll realize that time and time again, a superpower comes into play, a reserve currency is determined for the world, everybody uses that reserve currency, they invest it back into the capital markets of the country that is in superpower, eventually they get into so much debt, eventually other countries outprice them, like Britain did with the ships in 1850 against the Dutch, and eventually took over as a superpower. And this again happened in 1900s with the US. And it looks very, very similar if you go back 1,000 years to what's happening now with China. And so I knew at that time in 2010 that I needed to go back to the drawing board. I needed to focus on being ready for that one moment in time, because I think all the investment advice and everything we get, who cares how much money we make if we're all going to lose it in 10 years, you know? So event risk is everything, preservation of capital at that moment in time. And so during these shifts of power, gold was the one standard that held value. Now, there's a lot of argument being gold being a good investment class. Probably not. It's money. It's cash. It's held its value. An ounce today buys the same amount of bread it did 500 years ago, and it holds value during very, very difficult times. Now, if you had gold and you're able to generate a yield on gold, that would now become a very interesting event risk-driven strategy to be able to have one of the most advanced forms of money and one of the most advanced investment classes possible. So in 2013, I decided that instead of speculating and leveraging and taking big risks in the FX markets, I'm going to do a fixed margin, high frequency turnover business, which in theory, you buy gold at a 1% discount, you ship it to Dubai, and you exit it on a Friday, and it becomes a 1% a week business, right? But this is in theory. Little did I know, I didn't have the contingency after contingency cost prepared for this. But naive and stupid, I fly into West Africa. I set up a Ghana gold buying office, and I found myself walking around with shorts and a t-shirt and a backpack of cash trying to buy a kilo of gold, which was extremely foolish. So for 2 years, I basically getting kicked in the face was a more pleasant experience than being in the Ghana Africa gold business. But nonetheless, I got the business right, and we started doing it correctly. And at that point in time, it's a small margin business, so we were drowning in operating costs. So I only had a choice that either I increase my volume or I go for a higher margin. At that time, raising more money for an Africa gold trading business was a difficult endeavor. So I thought, okay, I'm going to go where nobody wants to go. So in 2016, the war ended in Central African Republic, and the sanctions were removed. And I was the third gold buying office in Times Magazine's most dangerous country in the world. It became a vendetta at this point. I went deep into the bush of Congo, and I used to sit there for 2 months looking for this 1% margin, which is never good to have a vendetta with your business. And I think that it's always important to just state the raw truth, because that is what GoldPesa is about, and most people will think I'm crazy for going into this much of a depth, but it's the truth, right? And this is the story, and this is the heart that's behind GoldPesa, and I think it's important for the world to know. At that point in time, I realized that this is not a sustainable business model. I've been held at gunpoint twice. I've been kidnapped for 3 days, and I said, there's no margin in the world that's worth that kind of risk. All the while, the only blessing in disguise was that I had so much time to code and read, and in fact, I probably got 3 more degrees just being in Africa by reading a textbook every month. And so that was truly my degree, and I built something called the Pawn, which has a little bit of merit, and it is something I'll get into in a little bit. But I closed all my Africa offices down. I flew into London. I set up a quant firm called Triomia Capital. A family office in Abu Dhabi has backed me in a very difficult time, and as a result, we've developed one of the smartest teams in the world, and we primarily are focused in applying principles of DSP to the FX markets. And at the same time, after closing my Africa businesses down, I have a DMCC company here for the last 8 years, and we do about $15 million in volume, which is not huge in the gold business. We do it 100% on credit. We have built a huge trust with a couple of suppliers, and so it looks nice on our balance sheet, but with the small margins on credit, it really just keeps the lights on. So now I've had these 2 separate businesses. And I'm thinking, okay, in the hedge fund side, by the time you do the mathematics and a lot of what ifs, right? A lot of what ifs to build track record, a lot of what ifs to raise a hedge fund, get regulated, which we're in the process of doing in Jersey with the regulated hedge fund by the FCA. But I felt like we needed an accelerant, and I felt like we needed to give the everyday person exposure to our quant firm without giving them a huge amount of risk. And so GoldPesa was born. And GoldPesa is effectively a gold-backed structured product built on the backbone of quantitative science. So there was a video actually. I don't know if it's working, but maybe I'll just go into it. Just gotta go back. Okay, there was a really good video, but if we can manage it, I'll play it at the end. So GoldPesa is a gold-backed structured product. It is not a stablecoin. And we do this by combining our quant firm together with physical gold and blockchain technology to create a gold-backed token with upside. You know, when I was looking at someone in the gold business, everybody in the gold business, they go and try and make stablecoins. Now, when I looked at the stablecoin market, Paxos Gold is at the top, right, in terms of volume. They have a 600 billion market cap, but it took a lot of years, a lot of money, very small margins to get there. And then you got a Dogecoin that is, you know, going crazy. So I sat there thinking, what am I missing? And I'm missing the fact that nobody cares. Nobody wants gold. Who cares, right? You need a Bitcoin. You need an upside. So how does old finance come up with a gold-backed token with upside without ripping anybody off, right? And the only way to do that is to create an earnings component into the token, and hence the main GPX gold-backed token was created. So as I mentioned, Paxos Gold itself is a stablecoin, and on the left side you have quant firms, and GoldPesa is right in the middle. We utilize both of them to create a very safe, structured product with full upside and very limited downside. So how do we do this, right? This was heavily inspired by a constant proportion portfolio insurance structured product, which some of you might know. The conversations I've been having in this summit have been quite intellectual, and so I will go a little bit deeper into the intelligence behind the pawn, as well as the methodology that we use in terms of creating tokenomics that is effectively a structured product. And so we do this by taking half of our fees. Every time you buy a GoldPesa token, we charge you spot price plus 1%. Each token is backed by 1 gram of gold. We take half of the 1% and we invest it into the quant firm called the pawn. It's the strategy. Profits generated by the pawn are used to buy back the token and burn that token. And what this does is it effectively creates an earnings on an asset class that does not have any earnings. And if our quant firm was to blow up all the money and we lose all the money, well, then our token holders have bought gold at spot plus 1%. And hence the bottom end safety net for this structured product. Now, if the quant firm does well, then it's only upside from there. So definitely need to be long gold if you want to invest in this asset class, because the GPX price effectively is correlated to the spot price of gold plus the profits from our quant firm, which is the pawn. Now what happens is when we buy that token back using profits from our quant firm, we burn that token. It's not that we hold it in our treasury and hold it in inventory, because everybody would be scared that we would dump it on them one day, right? So we burn it. And what that means is even if GPX is trading at $1,000 and there's only $50 of gold behind it, we will pay $1,000 and burn it and keep the $50 of gold in our pocket, effectively transferring $950 to the market. And this is what creates a drive in the price and effectively, theoretically, enables the token to float away from the spot price of gold and trade at a premium based on some PE ratio, which we traditionally see in the stock market. So now it comes down to, okay, without the pawn, we're just a stable coin, right? And normally at this point in the presentation, I usually just brush over it because it becomes a bit too much. But I think that the crowd in here would appreciate some of the details about the pawn other than its sheer performance. I mean, the few things you can take away from this is that the pawn does a 25% annual return with a max drawdown of 5.4%. And the other key takeaway from this is the max drawdown duration, which is 111 days, which is quite steady. Now, with these types of presentations, unless you can see the code, it becomes a little bit of a black box. And I think the only way for me to be able to get into the depths of this is to explain some of the characteristics of the pawn, which will hopefully give you the intuitive sense that we are a team that it does not have the ability, we don't have the ability to trick ourselves into believing that we have something when we don't. And so to get into a few details, the pawn is a long-short FX trading strategy. We trade 28 pairs made up of 8 majors, which effectively gives us a natural hedge as we're trading ratios. We're not trading absolute asset classes. As engineers, we always like to bring all of our knowledge into a single number. And so the pawn is effectively an indicator with a single number. And what's most important about the pawn is that indicator has no inputs. That indicator is an output of the price variation data itself, which means you can apply it to any asset class without optimizing any parameters, and you'll get that same edge that is being created. And this same pawn code is applied to 28 pairs. I've applied it to Microsoft chart, I've applied it to Bitcoin chart, and it still generates a relatively similar edge. Now, this pawn code is truly AI. Everybody spits off AI like it's some kind of buzzword, but I'll explain why it is AI, and it's because it is truly self-learning. What happens is, I think when it comes to predicting the future and what has never happened, I think it's important to either, you go way far back into time, 1,000 years, or you only care about what happened recently. And so we've trained our neural nets on a very small window frame, on average 3 months. And so what that means is if the exact same situation 3 months ago happens today, it could completely be a change in buy order to a sell order. And because we're a long-short strategy, we're always in the market, and our output is very simple. If the predicted value of our nets based on our pawn indicator is greater than 0, stay long, and if it's less than 0, go short. And what's most important about our nets is that they're so small. So 100 years from now, the pawn will make a prediction based on what happens 3 months before that 100 years. And it forgets. It moves forward every 4 hours. It learns the next 4 hours, and it forgets the first bar. And so it's really important that it forgets. Humans have a hard time doing that, but we can train neural nets to do this. And what makes this backtest so statistically significant is the fact that we've got 20-year backtest with a single neural net and a single output from an indicator that has no inputs, and it generates that kind of performance traversing through time over 80 out-of-sample data sets with no change applied over 28 asset classes. And so I got into that depth because everybody has an algo these days, and frankly, it's the most difficult thing because I can't show anyone our code, and so I can only give you the characteristics so that you can trust my assumptions and our team's assumptions that we might just have something here and it has some merit. And so this is the driver, the income generating vehicle, and at the end of the day, we're risking half of our own fees. So if we lose all of it, it's no risk to our token holders anyways, and we're not charging an inflated fee in some way to trick securities laws in order to create some kind of structured product. It is a 1% fee, it's not unreasonable, and the snowball effect of that is massive. So, with these types of businesses, what's so important here is that we've created an external tap of money based on intelligence into our ecosystem. If you take Paxos Gold with a $600 million market cap, they do $50 million volume a day. That means in 12 days at 1% fee, they turn over their entire market cap. So if I take 12 days times 100, in 1,200 days, if we were using the same model, we would own all the gold free and clear, and everybody, all our token holders would be broke, right? And so, not to say anything about the exchanges or anything, but to me, we are not a siphoning business, right? We are bringing external money into the ecosystem. We will buy back the token. We don't need extra whales to come into this ecosystem to sustain our 1% cost. And that whole nobody having any money and us owning all the gold is definitely a really, really hideous business model. And so that is not something I wanted to do, and this is why we created it as a structured product. Now, this is all great, intelligent, GPX token, great. But now, how do I get anyone to buy it, right? This is the difficulty. So I knew that everyone just wants a 100x meme token. So how does old finance mind come up with a 100x token and have it have some mathematical intrinsic value? And the only way I knew how to do that was to create an exotic call option, introducing the GoldPesa option. It's an exotic call option with a moving strike price. One GPO token gives you the option to purchase one GPX token at spot price plus 1%. And so hence the moving strike price, because it's spot. And what this does is, in simple math, the option intrinsic value is effectively correlated to the premium of GPX. And that to me is how I can create a 100x token for everyone that you can actually calculate. And what's really important here is if you buy the option, which is trading right now on Ethereum on our own DEX, which is app.goldpesa.com, it's trading at 52 cents. If you bought this at 52 cents and then exercise your option for 1 gram of gold, which is $50, plus 1%, which is 50 cents, you've paid $51 for a gram of gold, which is spot plus 2%. And even if you sold it for $5 to someone, they'd be paying spot plus 11%, which is still better than the airport price in Dubai for a gram of gold. And so what I've done is I've created a 10x intrinsic value in the token, where even if you sold it for $5, you're not ripping that guy off. And I did this, why? Because I need to create mayhem. I need to create volume. I need to make people money, because that's the only real way to blow these things up, is people have got to make money. It's as simple as that. Something that I think is really proprietary to what we've done is we've used Uniswap version 3 for our liquidity. I think that Uniswap version 3 is highly underrated, and what it does is it's fantastic. It effectively allows us to concentrate our dollars in a range in order to create stability in our price using automatic market making. And something that we've done at GoldPesa is we've created an automatic rebalancing mechanism where we rebalance the liquidity on Uniswap version 3. And in simple terms, we are effectively creating stability in our price movement in order to get a very linear equity curve as long as there's volume and demand in our token. So we're very, very strong on how to manage liquidity. So some of the details I'll get into. These are just stats of the token itself. Sorry, the time is kind of up, so I'll go a little bit quicker here. So just in terms of infrastructure, we have a gold buying license in Dubai in the DMCC, and we have a company in London, which is where we operate from. As I mentioned, we already are in the business and do some physical gold trading. But at the end of the day, it doesn't really matter, because in this kind of a token, you need regulation. And getting regulation is really, really tough. And so I thought, let's not even bother going down that path. I decided that I'm going to set up with a Paxos Gold, because we are effectively creating a yield on Paxos Gold. So if you're a GoldPesa option holder, you will come to the GoldPesa smart contract. You will come with your option and your Paxos Gold token. Our smart contract will wrap it, burn the GPO, and deliver you a GPX and custodian the Paxos Gold. So the magic question, is the gold really there? I don't really want to answer it anymore. The onus is on Paxos. Ask them. We are simply taking their token and custodying it in a smart contract, which we don't even have access to. And that's the main part of the gold. And GoldPesa was built for the everyday guy. It was built for the guy in Africa who needs to save, for the guy in India who needs to save for their families. They can't get bank accounts. They don't have any access to such intelligence. And this is why it was generally made. But that being said, I'm not Santa Claus. I've definitely built this business because we want 100 million grams of gold, and we want to own it free and clear. And it's simple as that. We want to sell 100 million tokens. We want to sell 100 million grams of gold. We want to charge everybody 1% when you buy, sell, and transfer the token. We want to use half of our fees to invest it in our quant firm, and we want to use profits to buy back that token and burn it, so that we own all 100 million grams of gold free and clear. That is GoldPesa's goal, and we want our token holders to make us pay a hell of a lot for it. And that is the true game here, and that is the ecosystem that we've created. And the buyback, the broadcasting of the code live so that there's no doubt of its validity. All of these things are not only for transparency, but it's to create a lot of volatility. Everything we do is to create volatility in order to make more 1%, more 0.5%, and let that snowball grow. And so That is the GoldPesa ecosystem. We have launched the GoldPesa option on October 21st. It's trading on Ethereum right now at 52 cents. We've just launched GoldPesa option mini, which is right now available for sale on Pig Sale. So definitely go on pigsale.finance, find GoldPesa, have some BNB, and buy it and close your eyes, because I promise you we are going to create mayhem with a lot of intelligence and a great structured product, which you guys can mathematically calculate its intrinsic value and not just gamble for the sake of gambling. And so I thank you for this presentation. I thank you for listening to me rant for 30 minutes. All the best.